What's going on, guys? Welcome to our weekly prep. Sorry for the delay. Core four, I probably, there's nothing going on tomorrow, so we could just do that tomorrow. Pick a certain time that, we're away from the markets. But just keep grinding, guys. Like a lot of you, I understand delayed gratification is one of the key things. I get a lot of comments from a lot of us traders in the community chats showing that how the core fours are actually helping them. That's why, like, it's really good, man. I really enjoy that you guys actually show up for them, and just to pat yourself in the back for actually taking this seriously. Just showing the potential of what how trading could actually change your life. But it takes effort, and it takes a new version of ourselves to pursue that, right? I just also talked to somebody else that he's been struggling with trading a lot, and he realized that he was putting too much pressure on himself. He's like, he was trying to force this to work out. And the moment that he started to let go a bit and just take that step back, trade less and not force it, he actually was just doing a lot better. So the goal is you're going to be able to figure out those questions for yourself, right? Because you're just starting out just expecting just to have all the answers. And we it's just what society makes us feel like, right? That we just have to get all the answers right now, like we that sense of urgency. And sometimes we just have to take a step back, and you're going to realize those answers that you've been looking for that whole entire time will start to come your way when you're not forcing it, right? Because trading is a lot different. It takes a lot of planning. It will definitely expose who you are. You're very impatient, it's going to show. If you're greedy, it'll show, right? Even if you're extremely patient, it'll show, right? Yeah, exactly, James. When you revenge trade, like if that's how you are in your personal life, very revengeful, like those that sense of feeling when you know you're doing something wrong, you do it anyway, it's going to show in the markets, right? So it just exposes us. So we have to work on that every single day, but first we have to be we just got to let go, right? Some of us hold on to our way of thinking for so long, and we don't understand what it means to just let go, right? Let go and things will come to you. All right. But just to help you guys with that. But now get into the weekly prep. So we understand that last week we had US CPI was higher than expected, and also NFP numbers this week came out higher than expected. So this actually increased the odds, right? The markets was anticipating more of a 97% chance of a cut, a pause for the next rate decision. Okay. So that's most likely going to be priced in. Definitely, only way this is going to change is if we get something different from Fed speakers this week, like we got Jerome Powell speaking. But last week, still, like we had, I put no clear direction, but equities did push higher, obviously, but we did have a little bit, we didn't really get that nice trend like we wanted. Dollar did push higher too, but then we still overall in that range. Look at gold, still in the range. You see equities is like the only thing that really pushed higher, but we could just see that US 30 pretty much pushed lower. So not really that much of a clear edge as of yet. But when it comes to monetary policy, right, we got the hawkish pause. So regardless, we understand the direction of monetary policy, and you can write that down too, is stronger dollar, right? Stronger yields. And it's supposed to be downside for equities, but not long term, right? So I don't expect that to be long term. But if we do get some downside in equities moving forward, I only expect more downside in equities will be coming from a risk perspective, like tariff fears or what Trump tries to play that crap with Jerome Powell, like stuff that is sentiment, right? Monetary policy, the Feds is going to cut rates anyway. So markets is it already reacted to it. This is why we've been seeing so much upside. We're in July. We've been seeing upside in equities since April. So it's already reacting to the uncertain, like the fears of tariffs out the window, central bank dovish policy. It's already reacting to it because that's what is expecting to happen next, right? So markets is already reacting to it when it comes to the equity market. So the best bet is looking for lower lows, like a low to get formed, and then look for continuation buys, unless we get sentiment to cause equities to push lower. Okay. So that's how you should be looking at equities moving forward from a monetary policy perspective and a sentiment perspective, because that's where you're really going to get the direction. All right. So usually downside is going to happen with negativity. Like if there's really not a lot of negativity coming in and pushing into the markets, even if we get a push lower, it sets up for better buys moving forward. So that's how we look into it. We also got tariff news coming into place, right? EU, Canada, the trade wars with these countries is still the main focus, right? So Lutnick recent comments today is that he's confident to get a deal with Europe, right? So if we get that deal to actually come in place, that is also a positive regarding tariffs. That's going to be a positive for the markets. That's going to give us a direction. Also, we see that Trump is going to meet with the Chinese president during like ahead of the meeting that they're supposed to have in October. So it's another positive thing that they're finally going to meet up. Obviously, this is the first time that we see that they're coming together after any talks of the framework. So that's also a positive sense, right, for the markets as well, that they could come together. And if we could see any agreement before then with these two presidents coming together, China and the U.S., that would be even more optimistic, right? But the market so far is already anticipating positivity, so it's nothing really new. What would surprise us if shit hits the fan, right? So just know if shit hits the fan, right? Risk on or risk off market, guys, right? So if we see that between China, Europe, Canada, Japan, right? China, Europe, Canada, Japan, if these four countries is ended up going bad, that's going to be a risk off market. Okay? If it's not, things end up going positive, we're just going to continue to see the direction that we already been having. All right. So far over the weekend, I know we had some optimistic headlines regarding Syria, I believe too. That's also positive from a geopolitical standpoint, but markets ain't really focusing on the wars. But so far, these were like the most important headlines that we got so far. Tariffs only on 25% unaffected by the U.S. And so that's the U.S., Mexico, Canada, right? So we understand that. But nothing crazy over the weekend, like nothing really crazy, nothing really impactful that we have to really worry about. So earnings coming up this week. So earnings seasons is coming back, right? Last week wasn't that bad with the bacon earnings, but this week, what we got moving forward, right? We got Lockheed probably going to do well with all this war going on, but we got Wednesday is going to be Tesla and Google, so that's going to be important for what what indice is going to be important this week, guys. We got Tesla, Alphabet, right? We got Apple, we got Intel. So what indice I think is going to be important to pay attention to on Wednesday, because it gives you guys an idea for obviously it's aftermarket close, so we're going to see the earnings come out probably after 4 p.m. ish, right? I'm not expecting anything good from Tesla, but you never know, right? You never know. So I know a few of you guys here are Tesla shareholders. If that shit comes out positive, you'll be glad to get it from these lows. But if you're not, definitely focus on Tesla. I know I did a call forward before with you guys talking about building you guys like a retirement fund, like focus on building like ETFs, where like you should have IRA, Roth accounts. Definitely work into that as well if you haven't watched that video yet. But definitely work on that, guys, because like you'll be more interested in all of this stuff that is coming into place. So also we got Fed speakers this week, right? We got Governor Bailey. He's going to be speaking on July 22nd. And we also have Jerome Powell speaking the same day as well. So Bailey's going to be speaking at 5 in the morning. And then that's if he gets there in time, obviously. But 8:30 is going to be Jerome Powell. So I believe that's Tuesday. Yeah, 2 days from. Yeah, so it's going to be Tuesday. All right. I'll talk about economic data though. But Capital Framework for large banks conference hosted by the Federal Reserve. So I don't know if they're going to be speaking on monetary policy. Uh, Bailey, Bank of England half yearly financial stability report. Bailey is probably, but Powell maybe. We'll see. We'll see if there's like a Q&A session. We'll obviously watch that together. So this week, the 21st is tomorrow is the BOJ. They have a holiday, so that's just really it when it comes to that. So just a quick snapshot of economic data for this week. Monday, nothing major coming in tomorrow, okay? But we got the RBA meeting minutes. It's going to be at 9:30. So again, like the RBA meeting minutes is just like it's just like a rough, like a quick summary of all the comments that happened from the rate decision. Like if anything changed over time, usually we'll get different headlines, right? That could be a surprise. That could lead to an opportunity trading the AUD currency, right? Usually we'll talk about that before the event because we did have data that happened before. But usually, right, if we get a lot of changes, sometimes the RBA meeting minutes could give us a different language. So it's all about the language, right? Usually the language, it could be dovish, and then if we get higher inflation, then the meeting minutes could say something hawkish with the language. That will be an opportunity. But if it's ended up at the same language of the rate decision, usually the RBA like the meeting minutes that we get, sometimes it's not that important if it's the same language. So we look for a surprise. So here you go. Wednesday, we got Powell and Bailey speaking, right? So Wednesday, not a lot going on, but all we have is we also got Aruda speaking too. So that's the chair for the Bank of Japan. So we got three actual chairs speaking on Wednesday. So let me double check. Is it Wednesday? One sec. Let me just make sure it's Wednesday first. Ba-ba. Yeah, it's Tuesday. All right. Fucked up. Yeah, it's Tuesday. All right, so this is Tuesday. Sorry, guys. All right, Tuesday. So Wednesday, we just have PMI data, but that's just AUD and the yen. Not really exciting for that event. But Thursday after that this is where we're going to have majority of PMI data for Europe, Euro, and also for the US, along with the rate decision. We got the ECB rate decision this week. So definitely going to be exciting for the Euro currency moving forward this week. So if you're trading it, just be pretty cautious unless we get like anything regarding tariffs that's going to impact Europe in a negative way. But the fact that if the EC if Europe is looking to actually get a trade deal along with the US, that will probably allow the ECB to have a little more flexibility when it comes to their interest rates. So yeah, so we'll probably see some different shifts, right, with the ECB that they could actually give us a certain tone that we could actually look for a tradable opportunity because this one they're expecting to hold rates the same, which is a possibility that they do. But if we could get like a trade deal before the rate decision, then that will probably change these odds, right? If the US and Europe actually have a trade deal, right? And then the ECB don't have to be in fear of that trade deal anymore. But with high interest rates, I mean, with that uncertainty regarding tariffs, it's going to make the ECB stay at a standstill. They're not going to want to continue to cut rates if they feel that tariffs is going to be extremely high between the US, right? That's going to spike inflation. So it could cause the ECB to stay patient, right? But it could also make them fear higher inflation, which could also strengthen the euro. So this is why the trade war is going to be extremely important, both Europe and also with the US, especially before this rate decision. If we have any positivity, that could probably lead to the markets anticipating this decision to be more dovish. But if we don't hear any positivity, it would make it more at a standstill, which mean more of a hawkish pause again. Okay. So that's why this one is important. Then we got more PMI data afterwards. Asian session, we got Tokyo CPI on that Thursday night. Friday, we just got pound retail sales. Not really a fan of trading that, but that's really it for this week when it comes to data. Very not that heavy for this week, right? But we're going to be focusing on news headlines, right? Obviously, risk sentiment. And Marcus is going to be prepping for next week, right? Next week is going to be the rate decision. So for the U.S., which is most likely going to be a pause, but we could see the markets start to react to it now, right? It's a possibility. I could see we could get continuations of a stronger dollar now leading into the rate decision, right? If things remain the same, because market expectations still 95%, this also went lower, but remember that this was at a 97. So this week we're going to be focusing on that because we have to look for any type of shifts from the markets, right? If this continues to push lower and lower, then this is what's going to weaken the dollar. If this continues to stay high, like 95, still to me is 100% probability of a pause. This will continue to give us a reason for a stronger dollar, but we're very close to that rate decision. So any Fed comments from here on out is going to be extremely important. But let me just double check this one thing first before I talk because I'm surprised the blackout period. So July. Yeah, so we're in the blackout period. So I wonder, it was supposed to be in a blackout period. So it's kind of interesting to, it's very interesting to see Bowman, like, because y'all see, right? We're in a blackout period. So it's kind of interesting. Yeah, pretty interesting that they're still usually Fed speakers don't talk, but they are, which is interesting. I personally don't think they could talk about, they're not supposed to speak at all, but it'll be interesting to see because they're not supposed to talk about monetary policy this week. Like the 19th is supposed to be their last day, and then Fed speakers will come back on August 1st. And there's no rate decision in August and in September. So it'll be interesting to see like if they say anything, if they give anything up before the rate decision this week. So something that we're going to be paying attention to. Uh, like the blackout period is just it's just like 2 weeks before the rate decision that no feds like pretty much no Fed speakers could speak like for like a week before the rate decision pretty much because they don't want to influence the markets, they don't want to influence anything, so like they don't want to show like they have like private indoor meetings and stuff, so they just don't want to have no influence before the actual rate decision. So that just means that Fed speakers is not supposed to comment on monetary policy for the blackout period. That's all. That just no communication. Like so, the background of financial trading blackout period is external communication. Blackout period is provided for the FOMC communications. I don't really say what it is neither. All right. So yeah, it's just that they just can't talk on monetary policy. That's just all that it means, But usually I don't see no Fed speakers. So it's kind of weird that I actually see some comments from them, which is pretty interesting. Like usually there's really no speakers. So I thought it was, yeah, it's pretty interesting to see that they are still having communication But I don't know. Let's see if they speak on monetary policy or not. Usually, like a week like this is not. We're not supposed to see any you like Fed speakers talking. Not even Jerome Powell. So they could possibly not talk about monetary policy. Then I think that would be okay. But looking at gold, guys. So just like I know at 9 p.m. most of you look for trades. Gold pushing lower, right? Good sign because it usually does the opposite of the dollar and the yields. And last week we've been seeing a spike higher in the actual dollar and yields, which also helps gold push lower. And one of the reasons why we've been seeing that spike higher in dollar last week is pretty much because markets are finally believing that okay, policy now is going to be pausing, right? Interest rates is going to pause. So that is one of the reasons we've been seeing a stronger dollar. It's all good, Dylan. You can watch the recording. And that is it's been a start, right? Because we haven't been seeing the markets react to monetary policy unless until this week. Last week, sorry. So that it's going to be important for us to actually focus on to see how things go moving forward, right? So I like that. I like the idea of a stronger dollar pushing up, right? Because it follows the expectations that we want, right? If we see a weaker dollar, I would like that to only be because I just showed you guys a CME report. I would like that to be because if the markets anticipate a cut, that's what's going to make the most sense. But data hasn't really been showing that. When it comes to tariffs, we've been getting nothing but positive headlines. When it comes to geopolitical tensions, besides Russia and Ukraine, everything else has been showing optimism, right? So that's what helps also. A lot of these things is what's helping gold push lower, which is a good sign, you know, but we also see gold is just like look how shitty this looks, right? It's some good swings that you can get. Obviously, like intraday trading between the days and the weeks, good opportunities, but it's not trending. We're just pushing sideways. We just see price go up, go back down, go up, go back down. Not really getting a actual clear trend is what I'm trying to say. Exactly, stuck in a range. So it makes it choppy, right? So you have to be like very strategic with the opportunities you look for with that break of structure, like that, not trying to be overly greedy with opportunities, but still overall, I like the idea of weaker dollar. Right. I think a weaker gold. Sorry. I think that is still a really good opportunity as long as we could start like most likely buy opportunities just to put it from a technical perspective. If we start clearing above 33.62, to me, that is those clear signals that we should be seeing gold probably push higher for probably higher for the session if we see that gold breaks above those highs, right? I would look for that for an opportunity for buys. As of now, like if we could form and respect this zone of 33.45, right? If we could form an order block here or any sort of consolidation structure, if we start breaking below that zone, I think you could take that good scalp at least at 33.34. And safer sells to me would be below 33.34, right? If you just don't want to take that sell scalp, just wait for that break below the support zone of 33.34. And I think that would be the safer sell opportunity for probably like today or tomorrow. All right. And then whenever price action we get towards tomorrow, then I would update it at that time. But to me, if we start breaking above 33.60, 33.62 area, most likely, if it, hopefully we get fear when it comes to that, right? We get uncertainty and fear when it comes to that actual trade. But if we could get a weaker dollar or whatever comes in place, I think that would be a good buy. But this is just give you guys an actual look in a 4 hour how that resistance zone is important and just to show you the shitty range that we're in. So just don't try to rush opportunities. You know, hopefully we get a reason so that we just not forcing, you know, we don't have to force anything. I think we just have to wait for reasons so that we just don't, you know, it's okay to use your technical trades. I don't think there's nothing wrong with that, you know, but most likely I could see that being anything clear, you know, just waiting for those technical trades. When it's coming to gold, right? I remember we have upside in equities. Everything makes sense. We should all be understanding why equities are still higher. If anything changes, right? I would only like sales could happen from a price action standpoint. Don't get me wrong. But if we don't have any like clear signal for why we should be selling off, right? Just look for these areas of interest, like around 22,800. If we push to that area support, that could be a good area to start looking for additional buys, right? If we push another area of interest around 22,600, right? And we don't have any reason for a sell off, we can look for that as a good area of interest to push higher. And the same thing for 22,400. So I would look at those three key areas. If price continues to push lower, just focus on those zones. Okay. But safer buys is just going to be above 23, 150. That zone right there. If we just start breaking above with all that optimism, then we're just going to have this direction continue to follow. Only because we just don't have anything that's screaming out why we should be selling the stock market, right? Other than profit taking. But from a long term sell perspective, there's really nothing out there screaming to us for us to be shorting the stock market other than technicals, or maybe if we get some buyers taking profit. Okay. But reasons for buys, as long as we still see optimism, right? As long as we don't see no negative headlines regarding tariffs, that would definitely help the stock market. But it doesn't mean that we should see just bust to the sky right away, right? When we look for those buy opportunities, just look at how the markets act in the past. When we formed a low, push higher. You formed a low. When we formed a low, it pushes higher. When you form a low, we push higher. When you form a low, it pushes higher, right? You form a low, it pushes higher. And I'm pretty sure if I just go all the way back, it's kind of similar. Once we get that low, that higher low, that's when price actually pushes up, right? So just try to refrain from buying at the highs because you're probably going to get stuck in a pullback. Make sense, guys? So that's what I would look for. But if we get anything negative, right, as soon as we break that area of support, most likely that would be a trigger for equities to push lower. So just that's just how I would look at it from a stock perspective, right? Try not to buy from the highs, wait for those pullbacks, and then let's see if you're at the right time, obviously during New York session. Then you could look for those higher highs to continue to get formed, right? Yeah, I see what you mean with US 30. It is breaking structure. And I saw that the London Stock Exchange are trying to, like, I think they try to do that with the US Stock Exchange too. They want it to be 24 hours. I mean, I don't like the session because it's the stock market, right? I see the break of structure here. I don't see anything negative, right? But obviously, to me, this is just a technical setup. But regardless, it's still 50-50, still 50-50. I would probably look for, like, if we could get a push lower to 144, 160, I'll probably be looking for buys at this zone pushing higher, right? So just remember, you don't want to buy at the high. You want price to come push lower, right? Hit a key area first, right? And then look for your buys. Buying at the high, it could be good. You could get a good scalp, but just be prepared for that pullback. That's just all. You just don't want to get stuck in a pullback. But I do like what you're seeing here because we could probably get another opportunity, something like this. But hopefully, headlines remain optimistic for that price to continue to push up higher. All right, guys. Everybody's good. Put a one if you're good. If you got questions, anything that you want to talk about, um, now's the time. If not, I'll see you guys in the group. All right. Put the live stream up so you guys could watch. Yeah, guys could have the live stream up for the rest of Asian session if anything changes. Then I gotta upload this. I appreciate you guys, man. We make more than streamers, yeah. um, second to last. Was it for yeah, enjoy your Sunday, guys. Was it for US 30 or was it NASDAQ? US 30? NAS? All right. Yeah, let's see if I can do it. Oh shit. Ba, ba, ba. Is it this? I don't think it was. Uh, yeah, I'll just do it again. Yeah, because I'm looking at the 4 hour from like a market structure perspective. So the safer buys is just going to be above here. But yeah, just remember like what I was talking about the pullbacks, right? Because we just don't know like at what key zone are we going to get a pullback from? Because long term, ideally looking for sales in the stock market, you could get it from a short term perspective, but from a long term perspective, it would only most likely be if we have actual reasons for it to have actually happen, right? So if we get a pushback, when we hit that zone, don't just automatically buy. Like when we hit these key areas, like just look at it from a key area perspective. When we hit those zones, then look at it as if, okay, what's going on, right? What is causing? Is this a good time to look for buys, or does this mean that we should be looking for more sells, right? So we hit those zones, just think about it, right? Before you actually execute. When we hit these key areas, does this mean we should be buying, or is there something going on right now in the markets that is causing equities to push lower? Because if things are still negative, right, and we get like negative headlines and we break below those zones, those same areas is areas of interest where you can look for sells as well. Make sense? So it just depends on what's really going on in the markets. Like if we have a risk off market and we're right here, right, and we're breaking below support, that could actually push price lower. Like the goal is just like, even if you're looking for sells, you still don't want to sell at the low. You want to see if price could pull back and then look for your opportunity to push lower. Okay, because you're going to get stuck at a high or at a low, and you're going to get stuck in that pullback, knowing that you could be in the right direction. That's what sucks the most trading equities, is that you could be in the right direction and then you could get killed with a pullback, and then a few hours later it will go in your direction. That's usually the killer in trading in US equities. So just try to have that little discipline and patience, and like don't just like try to have delayed gratification, because I know when you see that break of structure, it's like, and it's like, this is a good example right here before I go. It's like this break of structure right here. Somebody will enter it, then they will hold this and they won't take profit. And then they get killed with this pullback, right? And then bam, like they felt like they was wrong the whole time. And then look what happened afterwards. We continue to go back in profits, right? And that happens a lot. You want to enter at that high and then price pulls back, and then you was right all along when price continued to push up higher. So just wait for the pullbacks, right? And then you look for an execution. The problem is like equities is different from currencies, right? So when you see a pullback, you're thinking sells. And then the markets like that trades to stock markets is looking at better buy positions. Oh, this is a better area to buy, right? This is a cheaper price, so that's how it could help you with the language is a little different when you're looking at the stock market. It's like, okay, this is a better price for me to buy at. Instead of me buying at the high, oh, I gotta like it's $100. I could get I got a discount, right? The shit is $70 right now. I get a better buy position. I get a discount. So that's how it's a good way to look at the stock market, right? Instead of selling at a high, oh, I could sell at $100. Oh, I could get a better sell at $120. Now I could sell at a better price, right? So you look at it from that perspective. All right, guys, have a good one.